some of the private funds out there are not marked to market at all. You really have no idea what your investment is worth for 5, 7, 10 years, whatever, until the fund wraps up and the assets are sold. But you're running evergreen funds and you're providing liquidity at least once a year. So that means you have to actually determine the value of the properties in the fund once a year. Can you talk about when and how you do that?
That's a great question. I'm glad you brought it up, because when you asked the last question about the difference in the public and private markets, one of the reasons sometimes the private markets don't show as volatile is that reason. They're not marking their assets to value. So they're not reflecting the fact that maybe the value of the assets has declined this past year the same way the public markets are. So we think our evergreen structure of the DLP funds creates a really unique and I'll call happy medium between the benefits of the private side and the benefits of the public side, that you have an updated, value of your assets. So we have to go through every property we own. So in our DLP housing funds example owns, 17, 18,000 units today across 60 plus different properties. We have to go through every year and get all of those properties revalued. So we have to get a third party appraiser hired from a CBRE, Cushman Wakefield, et cetera, who goes out and does a detailed 100 plus page report, physically inspects that property, puts a value on it. Then that value goes to our third-party auditors, Cohen Resnick, who they not only have an audit department that goes through and audits it, but they actually have an appraisal review or valuation review department who does their own valuation of the property and gives their feedback and talks to the appraiser. So we actually go through kind of multiple layers of valuation every single year. And we're actually doing this all year long at DLP. We're going and getting what we call broker opinions of value, BOVs, across our portfolio, and making sure we're staying up to speed to what's going on with the value, looking for opportunities to drive value, getting perspective from the market of how we can best create value. But we have to do that on a regular basis. And there's no doubt about it, in my opinion, from Q1 of 2022 to Q4 of 2022, if you had the same property performing the exact same at the beginning of the year to the end of the year, the value went down. Cap rates went up. That's really across the board. I don't think there's really any argument to that. That doesn't mean, though, at DLP, as an example, our values went up last year across our portfolio. Even though the cap rates increased significantly, i.e. values went down significantly, in the 10 to 15% range. That's if we didn't create any value throughout the year. And so all year long, we're executing on a heavy value add plan. We're driving up the operating income. We're driving up our rents. We're cutting expenses. We're improving the value of our assets throughout the year, which allowed us, even in a tough year like last year, where property values softened, to have our net values across our portfolio go up.
The hosts of the YQA Investor Podcast are not licensed accountants, attorneys, or financial advisors. This podcast is free entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.